Welcome to Trading Nation. I'm Sarah Eisen. As the broad rally regains some steam here, there are a handful of stocks that have gone parabolic. We're talking names like Netflix, Valero, Chipotle, Amazon, and MasterCard, just to name a few. These stocks all trading 20% or more above their 200-day moving averages. Are any worth a buy here? Or have they gone too far too fast? Matt Maley is with Miller Tabak. Mark Tepper is with Strategic Wealth Partners. So, Matt, what do the charts tell you? Which names should we be watching?
Well, I think there's two names that I like and one that I don't like so much. The first name on the positive side is Intel. I mean, this stock made a very nice double bottom back in January and February, and since then it's made a series of higher lows and higher highs with a nice higher high just this past week. So that's quite positive. And we have a similar situation with Salesforce.com, a CRM. That stock, it made a nice double bottom even further back at the end of 2016. So it's been making a series of higher lows and higher highs for an even longer period of time, and it's also made a nice higher high just in the last week. So and these are new all-time high, I believe, for Salesforce. So this is a nice positive move, at least on a technical basis. However, TripAdvisor I'm a little bit more worried about. The stock is up, had a big rally just in the last couple of days. It reported good earnings, and the stock's up 25% in 2 days. The one problem is, though, is that when the stock initially reported their earnings, it was only up about 4 or 5%. After it opened, it really took off. I think part of that had to do with it had a huge amount of short interest. It wasn't record highs, but it was very close to record highs. So I think a lot of that rally was short covering. Now this rally has taken the stock up to kind of an overbought level, and also to its trend line going all the way back to 2014. So I think that's going to provide some decent resistance. And combine that with the short covering probably being over for now, I think that stock could pull back. So if you're looking to put new money to work, I'd rather go on the first two. And if you still like TripAdvisor, you want to buy that on weakness, not up here.
Mark, what do you think of Matt's picks?
I really agree with the Intel pick. I mean, it's got an attractive valuation with trading at a forward PE of right around 14. We've got a $60 price target on it. And I mean, when you look at big data and cloud computing, that's just a great space to be in. And we're seeing low double-digit growth there. So I love that one. Of the stocks you mentioned, really the two that I like the most are Amazon and Netflix. Amazon is just completely crushing the other retailers because they have this product that the other guys don't have, and it's actually one that's really like addictive to the consumer, and it's called Amazon Prime. And it's just so tough to beat Amazon Prime on price, choice, and convenience. And with these Amazon Prime members, they're just so much more loyal to spend double the amount that's being spent by the non-Prime members. And Amazon just recently increased the subscription price by 20%, and I highly doubt that that's going to turn any people away from signing up. So it's basically free money. The other thing I really love about Amazon is the Amazon Web Services, or AWS. And Amazon is the leading provider of cloud infrastructure as a service to enterprise customers. And in that segment, revenues are growing at over 40% year over year. And then we throw in the fact that the AWS is generating much stronger margins than the traditional retail business. It's really going to help the bottom line. As for Netflix, I mean, they've got this unbelievable library of original content, and that's really what's driving them. And it's for them, it's all about growing their subscriber base. So they're blowing through expectations on their subscriber base growth, and it's all because of this original content being so good. In fact, they're actually planning on releasing 80 original movies in 2018. And going back to what I said about Amazon, I feel like Netflix could follow a move very similar to them, raise prices by 50 to 100%, and nobody would bat an eye. So when you've got a great product and pricing power on your side, that's pretty tough to beat. So that's why we love those two.
Yeah, a lot of investors love the Netflix for that reason. Guys, thank you, Mark and Matt. Good to see you both, and thank you for watching Trading Nation. I'm Sarah Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.